welcome to the stream. It is Ryan here from YouCashCrypto, and today is October 1st, 2020, which means we just had a monthly close for Bitcoin and for the altcoins. So before we get started, I want to point out this is not financial advice. These are only my own ideas and speculations within the crypto markets. Please always do your own research and analysis before investing or trading. With that being said, let's get right into the chart. So we are going to start right now on the monthly candles, as they are so extremely important, and we just had our monthly close and we just opened our new monthly candle. So I outlined some very key levels here, and what we can see, we're really just going to focus on these two. I could go and show you the confluence from the past. As you can see, there's so much confluence at each of these levels. But currently where we're at right now, we just need to be focusing on these two levels, which range around kind of the $9,800 level to the $10,200 level, and as well as this level right here, which where the candle closes at the coronavirus crash on the monthly, and this level is around $6,400. So let's begin by looking at some charts, and we're going to begin with this one. This is my weekly chart for Bitcoin. I've drawn a few key trend lines here for you guys that we're going to dive in and analyze. So let me go ahead and take that off and we will begin. So we're going to start on the 1 day time frame. And you can see probably a lot of this at first looks a little bit confusing to you and different kind of things. But you can definitely see there's key levels. So first, I'm going to actually take this trend line off, and I'm just going to outline it a different color so you know which one I'm talking about. We'll make it this nice purple. This has been a trend line that we've held the candle bodies at ever since the coronavirus dump all the way down to 3,800, and this actually played as our new resistance whenever we came up the first time to test 12,100, and then the second time to test almost 12,500. But we're just going to go ahead and remove this line right now for simplicity and point out a few different things. So with this trend line that we're now going to talk about and focus on, again, I'm going to change it to a different color so it kind of outlines it from the other ones. Now this one has stayed from our highs, and it's also held most of the candle bodies and some wicks, although we did have a slight fake out here, but it held a support, again flipped into new resistance, and then back tested it, broke through, and then reflipped into support. And again, this is on the daily time frame, so each one of these candles represents a day. And as you can see, we held this level for a very long time, about a month. And then we broke below it and we retested it as resistance and that sell pressure, and then fell down. And then what happened? We came back up one more time to retest it, retested it again as resistance, and candle body closed below it. And that is what tanked us to this key zone right here, which is also not a strong support. I have this line dotted because it's mainly more wicks than actual candle bodies. Like we had the wicks over here, we had a wick test, and all of these wicks tested it before finally we had the breakout, and then we only tested back down to this level with wicks so far. So we'll have to see what happens there, but that is definitely a key trend line to be watching as well. Now, a couple things, if you guys aren't following me on Instagram, go follow at YouCashCrypto. I post all of my daily analysis, things you need to know. I also pointed out exactly when we were candle closing below this level. I pointed out the exact same thing for Ethereum, around $470, $480 before we plummeted down to 300 for Ethereum as well, which we will most likely be getting into a video tomorrow. But another thing I pointed out directly in this range, and this is where we're going to really dig into the analysis here, because this is where I left off on my Instagram page. If you guys have been following, then you know I took a month break to really only give all this information to the people actually investing and trading under me and listening to all this stuff. So I spent the last month really catering to them. But this month, I'm bringing it all back to you guys. Everything that happened last month where I called all these levels for Bitcoin and it played out so perfectly, I'll be posting that all on my Instagram. Starting throughout this month, it will probably take me a couple days to gather all that information, but you guys will see exactly what I'm talking about. So go follow on Instagram at YouCashCrypto. But with that being said, let's dive in even a little bit closer and look at the 4-hour chart. And we're gonna come back here. I'm gonna make this line black again, so it's very clear to see. And yeah, so here we are in the 4-hour. So now each one of these candles represents a 4-hour period of time. And I went ahead and removed some of the trend lines so I can make this a bit more clear for you guys to see what's going on. The first thing to point out is we need to draw this liquidity level right here around the $11,100 range, as this was a huge buy wall for a very long time, holding the Bitcoin price up, so that we could actually form a head and shoulders pattern. Now, if you don't know what a head and shoulders pattern is, it's usually a bearish pattern that plays out to the downside, which is exactly what happened here. And don't worry about it if you don't know. I will be making a lot of YouCash curriculum videos here very, very soon. But basically what it is, so you have your main, you find a liquidity level, which in this case, this $11,100 range would be our neckline of our head and shoulders pattern. And then what happened? At first, we came up to about 12,100, which again, if you follow me on Instagram at YouCashCrypto, you would have known we were pointing out this $12,100 as an extremely key level. And I mean, we only had a fake out up to 12.5 before actually falling. So this 12.1 that we were pointing out was very, very crucial level. But right here, this would be our left shoulder. So we went from about 11,100 all the way up to 12,100, and then all the way back down to around 10,800, honestly. But most of the candle closes were around that liquidity level of 11,100. Now, the next time we dipped down to it was right here. You can see we perfectly wicked down to it, and actually on this wick too, we came very close to touching that level again. But after this, we went from about 11,100 all the way up to 12,004, which created our head, because the head of the head and shoulders pattern must be higher, or if it's an inverse head and shoulders pattern, then lower than the two shoulders. So here our left shoulder was at 12,100, and here we had our head at 12,400. And now you can see what happened. We came right up to 12,400 and actually created a bearish divergence on the RSI on, I believe, the 1 day or the 1 week. We pointed it out whenever it happened, and this is where I ended the month at on my Instagram. But you guys can go back and look at all that stuff. But we went from about 12,500 all the way back down to that liquidity level at 11,100, and then found support twice on it. Now, this was actually very interesting because first, actually, you can see it in the RSI here. And again, if you go to my Instagram, you'll see where I called this. But again, it will take me a few days to post everything that I sent to my investors and clients. But as you can see, we created this bullish divergence in price where we double bottomed here at the $11,100 range with this one and this candle. But we created a bullish divergence on the RSI where we had a higher low, and that actually sent us up, let's see here, about 9%, 8.5, 9%, which was a very good play. And then we called the $12,000 being the top. We got to about 12,050, but we were calling for the 12,000 level to be the top. And as you can see, what happened here, we created now our right shoulder, where price went again from 11,100 all the way up to 12,000 and then back down. And if I draw a line from our candle close here to where our right shoulder was, you can see those two shoulders were almost exactly at the same price level rejected at, which is absolutely phenomenal. This is a perfect head and shoulders pattern to play out. And then, as you can see, once we broke the neckline, we fell all the way down to our support trend line right here that was around $9,850. And also, just for fun, I guarantee you if we do a fib move from our top to bottom here, and we pull this out, and we bring it to our neckline, you can see our 1.618 level where you would have taken profits from your move from shorting at 12,000 right here, would have been around 10,280, which is actually playing an extremely key role in our levels that we have right now. So the next thing we need to look at, we still have this liquidity level drawn around $11,100, and as a saying in the crypto markets, old support becomes new resistance, or old resistance becomes new support. In this case, it'd be old support becomes new resistance. So you can see how price always bounced off this liquidity level. This liquidity level was always the bottom, and so this was technically our support zone until we candle closed below it on this candle and then fell even lower. And the next thing, I'm going to actually make this arrow so it's not as distracting. And then once we closed below it, that was the confirmation that this liquidity level would become new resistance. And I pointed this out exactly on this drop, which again, you guys will see on my Instagram this month. So next, what happened? We found support along this line, came up, and now tested that liquidity level as new resistance and have sold off since. So this is definitely a key level to watch. We are almost in a little bit of an ascending triangle right now where we could just say, you know, the top is still at this $11,100 level per se, and then we can start drawing some kind of ascending triangle here where you can see this was our last low before we took off again to that level, and then we had candle body support right here shooting us up again, and then we recently just wicked down exactly to this level, and so far we have held it as support. Also creating a bullish divergence here on the RSI. You can see we had a higher low on the RSI, and we had a lower low in price action, and so far this bullish divergence brought us up again about 8.25%. So another bullish divergence that played out very, very nicely. And again, I pointed this one out to all my investors as well. Now, before we move on, there is one more head and shoulders pattern that I actually predicted that played out perfectly here. And my prediction was in this chart, actually right here, which I can show you exactly where I predicted it, which will be posting on my Instagram very soon within this box. And then the fall exactly down to the 1.618. Again, and you can kind of see the head and shoulders pattern here, but I will show it more clearly right here. So for doing so, we're going to move, let's go to the 1 hour. It'll be a bit easier to see. And yeah, so here we go. So first, you want to find your neckline. Our neckline was about, I would say, what's the best area? Probably around right here would be our neckline, around 10,800 to 10,830. This would have been our neckline, and then first of all, we have our left shoulder right here that came back down, tested the neckline, and then we created our head that was higher in price action, but still came down to the neckline again. And then the right shoulder wasn't as perfect, but you could still clearly see the right shoulder. And if we were to draw a horizontal ray from that, which would be about, let's put it at the wick, you can see it was where there was a huge, and this is exactly at the $11,000 level that we found resistance there. And then look at what happened. We candle body closed below that line, which was the neckline, and dropped about 5% from that level. And if we go look at my other chart, you can see that we had the 1.618 outlined and dropped exactly to it. And if let's just take this out for a second, because if we were to extend this neckline, you can see with the exceptions of a few fake outs above, it has acted as pretty strong resistance. Again, it was resistance here that flipped into support right here, and then back tested it into resistance again, and we have fallen thus far. So definitely an interesting level to look at, and another mini Head and Shoulders that played out. Um, so just keep that in mind. Now what we want to go look at is the line chart. This line chart is going to be very important, and I've been calling these things with the line chart for a very, very long time. Now, the first thing we want to look at is the monthly time frame with the line chart, because there are a few very, very key levels that we need to outline here. So here is the first level that we really need to take a look at, and this is around the 92.50 on the line chart. It's also with our monthly levels around this level right here. If we even drew another horizontal line at these candle bodies, which is exactly around $9,400, or I can move it down a little bit around 93.50 right there. So really, in the 9,000s is the line in the sand, and I will show you exactly why for so many reasons, unless we retest the 6,000 price level or we're able to go higher. But moving back to the line chart, so we know that this, in terms of candle closes, is very, very key, because the line chart takes out all the wicks and all the candles and only focuses on the candle closes. So you can see we had resistance here. We broke above and fell back below, retested that level again as resistance, fell down, retested it again, resistance, coronavirus crash happened. Then we came up and we basically got rejected again before finally being able to break through that level. And now what we can see is also we've created a bearish divergence on the monthly chart. And you can see it right here in RSI. We had a higher high in the chart on the actual line chart, but we had a lower high in RSI. So this honestly could be a very bearish signal for the monthly for Bitcoin, unless we can hold a candle body close. The wicks don't matter. We could wick down into the 8,000s, but as long as we close all the monthly candles, I would say above the 9,000 range, then this thing still has room to run. If not, then this bearish divergence could play out and we could have a very serious drop. So that's the monthly perspective. Now we need to look at the weekly perspective, because it's almost the same type of deal and it has the same kind of confluence. So the first thing I want to point out is this purple, and we can honestly close these other two moving averages and only focus on the 200 week. So you can see this line right here is the 200 week moving average. This moving average takes 200 weekly candles, averages them together, and gives us a moving average. And I mean, so far it's played perfectly. We had support here on it, support again, and then even during the coronavirus dump, even though we wicked lower all the way to about right here, 3,800, we candle closed the weekly level exactly at this 200 moving average and then went a lot higher. And currently, this moving average is at about 6,800. So it wouldn't surprise me for us to come back and test this, but as long as we have a weekly close at this level or above it, there's no fear of us going lower. If we have a close below this level, then oh my gosh, we could be seeing crazy price action for Bitcoin, even down to the golden ratio on the yearly chart at $1,200. But don't worry, guys, right now that is not a factor at all. We could even wick below this to 6,400, 6,000 level, but as long as we close all the weekly candles above this level, the bull market could definitely still ensue. And again, we can see the same bearish divergence playing out on the weekly. And it's not as clear, but you can definitely see it because it's only slight in terms of the line chart. We had a higher high on the line chart, which this close was around 11,005, and this close was around 11,009. So we had a higher high in the line chart, but here on the RSI, we were at about an 80 in overbought conditions, And then here we were only at about a 70, so we created a lower high on the RSI while creating a higher high in price action, aka a bearish divergence. And because this is on the weekly, we could have a long way to fall down to this level if that is what's to play out. But, and also, I mean, look at this. We touched overbought conditions perfectly before selling off. And on the RSI, there is one key level that we must hold. And it's right here around the 53, 54 level. We've held this as mini support and resistance flips. And if we break below, we could drop a long way down. So this is something you definitely want to be watching on your charts. You can see it was resistance here before we finally broke above. We had the coronavirus crash, came back down, and then look at this. We came up, retested it as support, went up again, tested it as support again, came up, tested it as support again, and then came up exactly to overbought conditions before falling exactly to this level, finding support again, having another bounce, and now it looks like we're coming down to test it again. So this is so extremely important, and I can't stress it enough, but definitely be watching that. We could be in some sort of like triangle formation in the charts right now. Let me hide this 200 moving average and draw it like this because you'll kind of see what I'm talking about. Let me go ahead and take these levels off for now as well. And so you can see we have the support trend line here on the weekly, again with a flat line of resistance around the top. I mean, this is kind of a fake out, as you can see, because we called the bearish divergence and all these other things. Being in overbought conditions, we did get above that level briefly, but not by much. Even if I move it to the very top of this one, you can see we actually topped out perfectly there. So we could be in some sort of, triangle formation where, we could come back down and then come back up and kind of bounce around here for a little bit before the actual move happens. But definitely keep your eyes on this. These are the levels for the line chart, and these are what you're going to be wanting to watch, as well as one more trend line that we had from our high. I don't really like drawing it from our high. It's not as clear and precise, but if you draw it from right here, and you can kind of see exactly what I'm talking about. So we were in this triangle that we actually pointed out on our Instagram too before we had this move up. And you can see we had resistance, resistance, resistance before finally we broke above, retested it, and confirmed it as support. And that's what absolutely skyrocketed us all the way up to almost 12,500. And now if we come back down to retest it and confirm it as support, this would bring us around the 8,500, 8,600, maybe even lower level. And again, we could wick down that low and then still candle body close a weekly candle above the 9K range, and we'd still be looking golden. That is a perfect opportunity. And remember these remember the price that I'm mentioning here, because this will play a role in what we're going to talk about next. So the next thing I want to really point out, and this is going to be kind of a long video because I've got so much to explain, but starting tomorrow with my analysis on Ethereum, it's going to be a lot more shorter and precise. But the main thing that I want to look at here is the Bollinger Bands. Now, on the monthly, we don't have too much data for it, so we can't predict precisely where that's going to be. Take this out. But we can see the median line always has confluence on the Bollinger Bands all the time. And I'm about to go into detail showing you why all this happens. But you can see we held as long support here. And then again, if we are to retest it, the median line is currently around $8,600. So on a monthly perspective, we could easily wick down to here and still candle close above it and keep our bullish trajectory going. But if we start closing below this line, or really on the weekly is what we want to be looking at because the monthly, again, as I said, we don't have too much data, but the weekly's been playing an extreme role. So here's the Bollinger Band we have on the weekly, and you can see whenever we dump down to $3,780, we rallied all the way back up, and we rallied to 10,000 at the very beginning. And then once we rallied from 10,000, we fell all the way to 8,100. And this was almost a perfect test of that median line on the weekly. Again, on the next candle, we came down and tested that level again and confirmed it as support, also as the median line on the weekly Bollinger Bands, and went up again to test our liquidity level at that time of 10,500, where we had one test, two tests, and then three tests. And at the time, it looked like it could have been a triple top before we finally broke above it. But again, as you can see what happens, once we topped out at 12,500, look at where we fell down to. We fell exactly, the low of this candle was, let's see here, it was 9,825, and the median line was at 9,700, almost a perfect test of it. And then look at what the next candle did. The low of this candle was 9,850, and the median line was at 9,846. An almost perfect test exactly to that level as support. We found it as support, confirmed it, and then went up the next week all the way to that liquidity level I talked about earlier of 11,100. I mean, the high of this candle was 11,180 exactly, and then we closed at 10,900, right below that level. And then look at what happened the next time. Because we tested that 11,100 as support, we fell, or as resistance, excuse me, we fell back down and we tested that median line again. The low of this candle was 10,136, and that median line was at 10,090. Again, an almost perfect test of that. So do not be surprised, guys, if this week we come down and we try holding this as support again. And currently the median line is at $10,180. So it would not surprise me to either see a wick down here or even a candle body close at this level. But if we candle body close this weekly candle or any weekly candle below this median line, we could have some trouble. Because if we go look back here, again, you can see we tested the median line as resistance, broke above it, confirmed it as support, went all the way to 10,500 again to double top at the time. And we actually did create a head and shoulders pattern in here too, which sent us down. But look, we held this weekly candle as support, and then we tried, at first price did come up on this candle and we tried holding on to it, but then we closed below it. And then look, whenever we closed below it, that's whenever we had the drop from $8,000 all the way to $3,800 in a single week. So if we close below this level, it could be very, very bad. Now, two more time frames I want to look at on the Bollinger Bands is the 3-day and the 1-day. So the 3-day, currently this median line again is acting as resistance. You can see we were holding it as support, back tested it as resistance, kind of traded sideways below it, finally broke above and confirmed it as support, broke all the way up to 12,005, candle closed below that median line level, and currently on the 3 days we're holding it as resistance. You can see we got rejected here, candle closed below it, and again we wicked up to it here, but candle closed below it and fell down again. And currently this median line is at exactly $11,112. So again, at our new resistance level of 11,100 until it's broken and candle body closed above to confirm it, this is our resistance line in the sand. This is where the bears have to keep price going down if they want to get these lower prices for the Bitcoin price. So keep that in mind. The 3-day median line is currently holding us as resistance, while the weekly is holding us as support. So if you're a time frame trader, definitely keep that in mind. But if we go to the 1-day, we can also see the same thing kind of forming. So at first we held the median line as resistance, broke above it, flipped into support, went down to it again, held it as support, and then look, we candle closed below it, came back up, tested it again, resistance, confirmed it, dropped, and I called all these things. Back here, whenever this was happening, I knew exactly that this was going to happen. And you'll see it all, again, on my Instagram as I post all of last month's trades coming up very soon, which I'm excited about. But then look, we rallied up, we candle closed above this level, and look at what happened. Exactly, found it as support, wick down to it, support again, wick down to it, support again, wick down to it, support again, wick down to it, support again. 5 daily candles easily that we held onto the daily median line as support before going up, getting rejected at that head and shoulders pattern, and then closed a daily below that level. And currently we're selling off as well. Because we have closed this daily candle below it, we could have another test of this median line like we did here before dropping again, or we could drop down to, again, this $10,200 level, which is exactly that weekly support as well, which is crazy. These price levels always play out so perfectly, and it's the candle body supports of these daily candles, so it's going to be a very key level. If you're wanting to take shorts, definitely look at the 10,700, which is where this median line is right now. Again, this is not financial advice. These are only my own opinions and speculations on the market, but this is where I'd be looking for shorts on a retest of it. And yeah, so the next thing, and one of the last things that we want to look at, is the moving averages. So I'm going to hide these Bollinger Bands and go back. Okay, so we have no data on the monthly. For the weekly, okay, so we have this purple moving average, which is our 50 moving average, and we have this red moving average, which is currently our 100 moving average. We already showed you the 200 moving average on the weekly that held as support right here at these candle bodies, and all the way back here in our bear market whenever we drop from $20,000. But looking at here, having a test of this 50 moving average on the weekly would not surprise me at all. And currently, this moving average is at 89.15. You can see all the candle body confluence that we had on at this level right here. Again, you can see on our 100 moving average all the confluence of these candles right here. Again, this was the line in the sand. We held support at it, and then we closed below it, which sent us plummeting. So these moving averages definitely have some confluence. So if we come down to about the $8,900 level, it would not surprise me at all, and it would actually, I would prefer that that happens, because that would even give us way more support for this bull market to actually be confirmed and start. Now on the 3-day, again, we're adding this blue line in here, which is now the 200 moving average as well, and we can see our purple 50 moving average, which is the short-term moving average. Right now we're holding support on it. You can see we had a few candles wick down to that level, but so far it's holding onto this 3-day line, and this 3-day line is currently at 10,200 again, just like the weekly median line support, just like the bottom of the daily Bollinger Band support. So this 10,200 is also a extremely key level at the current time. And then again, if we look at the daily time frame, we can see the same kind of thing. All these candle bodies have been kind of hovering around this 100-day moving average. We came up, we're holding this 50-day moving average as new resistance. After we held it as support right here, we candle closed below it and have been holding it as new resistance. Again, we candle closed these exactly at the 100 moving average, closed below it. This was actually a fake out if you were trading the moving averages. Came back above it, and we've currently been holding that level of support. The 100 is right now at 10,535. So it could be interesting. 10,535 could be support, and our top line is exactly our 50-day moving average on the daily, is exactly at 11,100, which again is our resistance. So crazy. And our support for the 200 daily moving average is currently at 9,400, which would perfectly fill this CME gap that we still have not filled. You can see we wicked into this area here, which I'm not going to get too into the CME chart right now. We'll go into that more detail later. This is already a long video, so I don't want to take too much of your time. But we could definitely come down more into oversold conditions, as well as fill this gap on the CME, which would not surprise me a single bit. So one other thing that we want to do with the moving averages real quick is let's change one of these. We'll change the blue one to a 21 moving average, because the 21 moving average on the daily, this represents 21 days, but on the weekly, it would represent 21 weeks, which is very important in the crypto markets, because again, it's 7 times 3, which everything revolves around numbers, and numbers are very, very important. So again, we can see we held it as support, back tested it, resistance, support again all along here, and we just closed below, and this could act as resistance around, let's see what that price would be, 10,700 again. So it seems like the short zone right now, for low risk, high reward trade setups, would be looking for shorts around this 10,700. But the RSI is pretty oversold, so we'll have to see what happens. Again, on the 3-day, looking at the 21 moving average, you can see during our consolidation point for like 3 months between 10,000 and 9,000, it was holding as resistance after previously holding as support. We broke above it, retested it, and blast off. And then again, look, on the 3-day, it's been holding as resistance, and the 100, or the 50, excuse me, has been holding as support. So again, the resistance on the 21 moving average is at 11,100 again on the 3-day. Finally, we're going to take a look at the weekly, even though we might have a monthly 21 moving average. Wow, yeah, we do. And that's at 8,600, which is in exact confluence. Look at this. If we put our Bollinger Bands back on and we have our moving average, you can't even see the moving average because it's exactly at $8,600 too. Our median line is at 85.88, and our 21 moving average, if we pull this back up, is exactly at 85.88 as well. Like, guys, these prices in the crypto charts play out perfectly with these indicators all the time. Hopefully, guys, with everything that I've been showing you, will give you an edge in the market. But again, we need to go look at the weekly perspective and kind of look at the same thing. So, wow, the 21 week has held support perfectly. Right here, that was at 98.46 as well, and the low was 98.50. Held it perfectly as support. And again here, it was at 10,090, and our low was at 10,136. And currently, that support would be around 10,180 as well, which is all prices that we have all mentioned earlier. So definitely watch out for that. And look at where our median line is. Or not our median line, excuse me. Our 100-day is right here around 7,800, which is also a key level for price action. If I was to draw a horizontal line right here, which let me pull this up. Yep. And then we're going to draw this right here. Yeah, I mean, you can see it's right at that level. And we had wicks up to it, we had wicks down to it, and we had candle body confluences all right there. So it will be interesting to see what happens with that. Last but not least, let's go into a clean chart here. We'll use this one. This one's good enough. And let's just look at some potential fib levels of what could happen over the next few months and weeks. So first, let's see what our fib levels are for this. So this is taking it from our bottom at 3,800 all the way to our top around 12.4. We know that 10,450 is a key level. I mean, we held this as resistance for the longest time. If I zoom out to the weekly here and kind of pull this over a little bit, about right here, and then zoom back into the daily, I mean, you can see this red line right here, this red fib level. We tested it once as resistance, tested it twice and double topped, which made us fall to 3,800, and then tested it a third time before falling back down into the accumulation zone before we finally broke it. Tried holding it as support twice, and then came back down, held it resistance, broke back above, and now we're kind of just chopping around at this level. The other thing to look at would be, let's take a zoomed out perspective and see. We need to see what fib levels would have the most confluence with the other fib levels that we have mentioned. So we know 10,400 is a big one to look at. Okay. Also, if we go from 3,100 all the way to our top around 14,000, we can see these key levels, basically where we candle closed. Our low candle was right at the 786. The 0.618 will be a key level, and that's around $7,200. As well as we have been holding the 0.382 around 9,800. We can even see this on the CME chart as well. If I zoom out here to the weekly fib levels, you can see all of our fib levels, and our 382 is right there on 98.20 on the CME. You can see we just wicked down right to that level and have gotten bought back up so far. Yeah, lastly, let's look at our current fib levels on the daily, and we'll just take it from swing high to swing low. And see what this brings us to. So it looks like, yeah, our 786 is right here around that 10,425 level, which is in confluence with that 10,450. We haven't been able to close back above the 618 on a daily right here. We got rejected exactly at the 0.5, which was also at our liquidity level of $11,100. And let's see what the 1.618 move would bring us down to. Wow, look at that. If we break 9,800, we could fall all the way down to 8,200 again, which, I mean, that's almost a perfect level. We had the wicks down to it right here. It'd be a confirmation of the actual breakout, because we'd come back down, test the 950-day downtrend that we had right here, retest it, and then finally be able to blast off and go higher. So I would really be watching this, the $8,200 level, as well as the $9,100 level. Really the 9,000 to 9,300, let's call it, level is going to be a very important level. If you were to draw this on your chart, let's see here. I would recommend maybe just drawing like some kind of box there, just to point out. Oh, where is my box? Oh, here it is. Just to kind of point that key level out, and we're going to draw this from 9,300 all the way down to about 9,000. And let's go ahead and make this black. So yeah, you could draw a box here too. Most likely we'll come down and test this trend line, maybe even with a wick. You could look for a wick down here, place some orders down here to try to get in before we have maybe a candle body close within this box range. I could definitely see that being a probability, but so far, again, on the weekly, be watching the RSI, be watching this key 54 level, as well as being overbought right here, which called our top perfectly. So yeah, that's all I have for today. I hope you guys have learned something. I will be bringing you a way shorter Ethereum analysis, but Ethereum just had an insane monthly close that needs to be talked about. I will give you a little hint. It could actually be bearish too if Bitcoin's looking like that. But again, have no fear. Bitcoin's still looking good. Don't think it will go back down to $3,800. And even if we drop down to the 618, which would be a monumental drop, I mean, from the top here to the 618 would be around a 40% drop, over a 40% drop. And if you go back and look in history, you know how Bitcoin loves its 40% retracements. So that would not surprise me at all. And that's around 7,100, that $7,200 range that I mentioned. And if we draw it all the way from our $3,100 level, that would bring us right around the $6,400 level. So thank you all for watching. Be sure to watch the Ethereum analysis video tomorrow. There will be a lot. If you have any questions, please email me, text me, call me, anything. I'd love to help you out. And as soon as I get my trading memberships all in order. I can't wait to have you guys as a part of my group, taking all my trade setups and everything, and getting this crypto.